if you can't get the bars from the very, very top, and it's already tight as hell in the wholesale market, in the retail market, heck, $7 over spot is cheap for a 1 ounce coin these days.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and quite excited because amidst all the things that are going on in the silver world, today we're going to get a firsthand look into what is happening on the physical silver level. Certainly, we've seen product shortages, delays, premiums increase, and a lot of other things going on that defy what we are seeing in the paper price. So quite fortunate to have Andy Schectman of Miles Franklin join me on the line today. And Andy, it's great to have you on in here. And how's everything going with you?
Always good to be here, Chris. It's good. It's good to see you. Thanks for having me.
Well, I know you've been a busy boy lately these days because it seems like people are buying a lot of silver, especially with the price low, which is different than a lot of times. Obviously, when we've had the spikes up in price, that's often when a lot more attention comes into the market. Yet it seems like that's really changed, and perhaps that would be a good place to start because on one hand, there's a lot of frustration with the Comex silver price being around $19, and people are wondering why, with inflation high and everything, that the price is so low. Yet it sounds like you're seeing, perhaps even more so than any other time when the price is on the lower side, strong reaction on the retail level. And perhaps you could explain a little bit more about what you're seeing there.
Yeah, I think that's all true. What concerns me is what's happening 1 and 2 levels above the retail level. The retail level, I've been screaming for a long time that I could sense it becoming harder and harder to get. You had to purchase much earlier, much longer in advance, hedge it, run logistics. What used to be a few days lead time was now 3 weeks, 4 weeks, then it became 5 and 6. And now you're buying stuff 90 days out from the distributors and the mints around the world. So I've sensed that coming. But what's concerning to me, Chris, more than anything, is the drawdown in supply from the London Metals Exchange, from the Comex, backdooring metal out of the ETFs. I mean, and you're talking gold too. We've seen almost 550 tons of gold come out of the Comex and the London Metals Exchange, literally since the end of April. And when you look at all the metal that is leaving the US, the numbers came out at negative 136 tons of gold were shipped out, and in August. And who's buying all of that? Well, if you look at the numbers, you can see it's Hong Kong, it's Malaysia, it's Saudi Arabia, Thailand, Turkey, India, China. These countries are massively accumulating metal as the supplies from the top are being drawn down. You see the Russian government remove the VAT tax and the capital gains tax on precious metals, imploring their citizenry to buy it. You see importations into silver, of silver into India that will be as much as 50 million ounces already for the year, and their premiums are triple what they have normally been. So you're seeing the world accumulate metal. At the same time, the official stockpile of the US hasn't changed. So where is it all coming from? Well, it's interesting that you notice a massive drawdown in supply from the LME and from the Comex. They're being bled dry. At the same time, massive imports are moving eastward. And there was an article just we were talking offline in Fox News the other day that talked about record imports into China. And so what concerns me more than anything is that you have the whole globe awoken to inflation, into geopolitical issues, into, half the refineries in Europe won't take our orders or are reluctant to do it because they're concerned about keeping the lights on with the energy problem into the winter. And all of the refineries here in the US are running at max capacity and are 90 days out. So when you talk about premiums that continue to escalate in the retail market, that's true. But what's even more frightening is the fact that from the Comex to the London Metals Exchange to the ETFs, where you're seeing a continual every single day drawdown of silver by the authorized participants at SLV. The biggest money in the world is pulling their metal off the exchanges, getting it out of harm's way, removing counterparty risk. And these are the epicenters of where the bars that are ground down into shot to make the planchets, to make the coins come from. And so if you can't get the bars from the very, very top, and it's already tight as hell in the wholesale market, in the retail market, heck, $7 over spot is cheap for a 1 ounce coin these days. This is what I've been talking about. And this is, as you know, you and I and the people that watch this show and the people that I talk to every week, and the people, we're the pimple on the elephant's ass. And the pimple's grown. You know, it's grown. It's a big one now. It's a big pimple, but it's still a pimple on the elephant's ass. When the elephant turns around and there's something that makes it say, hey, gosh, I need some gold and silver, it's already so hard to get right now, Chris, that I think it's going to define this market. And I would venture to say that you got about a week or more, maybe 10 days before, if you're not buying something right now, you will not get product into 2023. It'll be into 2023 before you get it, because everything starts to slow down around Christmas time anyway, and stuff is running by and large at a delay right now, 1 to 2 to 3 weeks. It's getting tough, it's getting tight, and I don't see it getting better, honest to God.
Yeah, and you and I have talked a bit offline over the past couple of weeks that some of the wholesalers that you go to, a lot of the products just there's delays or they're simply unavailable. Can people come in and buy 5 or 10,000 ounces of silver now? Do they have to face just limited selection of what's available, or what is actually out there that people can get at the current time?
I've been, for the last 2 years, I have been loading up on bars. I buy 10 ounce kilo and 100 ounce. And I'd go out on my line of credit and buy all I could buy from all of the major refineries all around the world. And to me, they've been a much better value. You're still able to get Comex bars, ironically. And so we can get the 1,000 ounce bars off of Comex. Don't know how much longer we'll be able to do that. We also have a relationship with a large distributor in Canada, and some of these bars come off the large banks in Canada. So we have a supply. We've been getting in kilo, 10 ounce, and 100 ounce bars. And yes, we have coins, the Britannias, some Maple Leafs, some Eagles. But I mean, you're talking 750, 775 just for the Britannias, higher on the Maples, and I don't know, 16, 17, $18 on the Eagles. It's insanity. So there have been bars, and you can get it. We have junk silver at 1175. Do you see what I'm getting at? It's like all of a sudden these premiums are getting out of control. And is it getting out of control, or is it just the market's way of saying that the price that is quoted on Comex is just flat out wrong? And I'll tell you, if price were a determinant of demand, as it should be in a fairly traded market, silver would be $100 an ounce or higher. And it would have been that way for a long time. And, you know, you've been right, but the manipulation and the suppression of the silver market has been extreme. I guess what I would say is different through all the time that you've been talking about this, and I've been talking about it, is the positioning of the commercial banks that are now long in the futures market, is the drawdown in physical supply. And I guess who in their right mind would want to be short in this market when the nickel market issue debacle in the London Metals Exchange in March showed just what can happen? And the concentrated short position in silver is many times what it was in nickel. It would be a epic disaster. So maybe, just maybe, the commercial banks have set a trap for the managed money who continue to go short. And maybe as prices rise, they won't come in and short the price. And price will become more a reflection of supply and of demand. Because right now, there's a disconnection there. And demand is well outpaced the supply. And you wouldn't know it by the price. And that's what's masquerading really what the true reality of what this market's all about right now.
Yeah, and as you mentioned that, certainly on the Comex, interesting. We just got the numbers. We're recording on Monday, October 31st, so happy Halloween. Hopefully, not too many people out there dressing up like central bankers, which would be a scary costume. Yet, the numbers that have come out here, we are now under 35 million ounces in the registered category on the Comex. You're taking bars off the Comex. You said it's getting harder to get, but how does this play out? Where if this number keeps going down again, a lot of the silver that comes to market isn't really coming from the Comex, but when does this become a problem, and how does this play out if that number should, what if it gets to 10 million ounces or someone takes delivery? How does this all eventually unravel?
That's what, and I talk about this, about, the picture behind me, the 1933 confiscation of gold. The very wealthy people, before Roosevelt confiscated gold, sent all their gold across the Atlantic in steamships to safe deposit boxes of Europe. They were cued in and clued in on hey, this is coming, better get your stuff out of the country. Well, I think that's what you're seeing right now. The biggest money in the world, or the industrials, or the hedge funds, or the family offices, or the sovereign wealth funds, they're drawing down supplies well before that moment happens. And you can see, I mean, it was at 120 million ounces or so at Silver Squeeze. We're down to 34 million. We saw 37 million delivered to India in the month of August alone. We've seen the London Metals Exchange deliver like 45 million ounces in the month of September. And that's 8 million ounces, almost 10 million ounces, even more than that. Yeah, 11 million ounces more than the price setting mechanism of the world has in the registered category. And if you take, I didn't see what it said, but last week, if you took the registered and the eligible and put it together, there was 218% more paper than all the silver inside the Comex. So, you're talking, if you threw the eligible in there too, 1 out of every 2 would get paper settled, or 1 out of almost every 3. At the 1,800% paper to physical discrepancy, 1 out of 18 would get their silver, the rest would get cash settled. We're almost at that rate. And if you look at the London Metals Exchange, which is supposed to be the epicenter, down to its lowest level since 2016, when they started recording silver stockpiles. If you look at how the silver ETFs keep bleeding quietly, millions of ounces a day out the back end, the big money is front running an event just like that. And it has to happen. The laws of supply and demand have to come into play at some point, Chris. If it's coming out of the ground at 7-1 in its relationship to gold, but priced at near 90-1, at some point, that has to reflect reality. And I think that's kind of why you're seeing the drawdowns the way you are.
Well, that does make sense. And I got an interesting one for you that I've been waiting to get your opinion on. You may have seen this article on Zero Hedge. This came from last week on the 27th. It's physical demand stores, bullion dealers offering huge buyback premiums. Interesting quote down here from Tyler Wall of SD Bullion, as he mentions, one of the individuals I speak to regularly who has firsthand knowledge of a Comex depository told me they didn't think there's any unspoken silver left, just people haven't figured it out. An interesting comment, given that there is supposedly 35 million ounces of registered silver left at the Comex. Obviously, you're not Tyler Wall, so you can't speak for him, but curious, any reactions based on that comment, or perhaps what he might be getting at there?
I don't know. I mean, that's, I guess the term rehypothecation comes into mind, but it may be the case. I mean, look, I've never experienced anything like this. When you and I started talking about this in 2009 or 10 or 11, I don't remember what year it was, a long time ago, when we talked about what happened in 2008. In 2008, there was a defined beginning and a defined end, and this has just been a slow bleeding. And that's why I've been talking about it for the last 2 years. And I got a lot of crap. And you and I talked about this offline, like, people you probably shouldn't say that, or people might not believe you, or a lot of people were saying that to me. You're full of crap. I can buy it at SD. And I was never saying that. What I was saying is that I could see the trend happening, that it used to be getting clients was 100 times harder than getting product. It's 100 times the other way right now. And I could see that happening. So if it's happening this much and you're seeing a reporting of a massive drawdown from all of these places, I mean, what is 35 million ounces anyway? What is 34 million if in 1 month much more than that is sent off by the London Metals Exchange? Maybe it is rehypothecated. Maybe those numbers are make believe. Are we to believe the CME group? I don't know. But I will say, in my opinion, we are closer to that moment than ever before, 100%. And, I don't know Tyler. I've talked to him a few times. He seems like a very, very honorable, straight shooting guy. So I have no reason to believe that he wouldn't say that if he didn't believe it. And I wouldn't dispute it. I can't really refute it and I can't confirm it, but it wouldn't surprise me.
Well, certainly will be interesting to see how that shakes out. And again, it sounds like we're not just talking about a supply chain issue where, things are getting gummed up in between refiners and suppliers, that they're actually having a hard time sourcing the underlying silver metal. Would that be accurate to say, or is it still just the refineries are slowing down, and where is the heart of the problem at this point?
It can't be that they're just all at overcapacity. I mean, let's look at the US Mint as an example. I mean, the US Mint in '08 and '09 and in that area, they were making 50 million ounces a year. And this month, I think they'll make 14 or 15 million. I mean, they were doing what were they doing? 50 million a month, roughly. Yeah, somewhere in that neighborhood. And now they're doing I think, is that right? Does that number sound right? Or 50 million a year, excuse me. They were doing 50 million a year. And now, like, this month will be, I don't know, a tiny, tiny, tiny amount. I'm getting my numbers mixed up, but let me just say this. It's a fraction of what they're doing. They're doing like 85,000 a month or something like that. So if they're lucky, we'll do 10 million this year, 13 million, something like that, 12 million. And they have the capacity to do a whole hell of a lot more than that. I think it's just becoming very difficult to get silver. And there is an awful lot of overcapacity. I mean, there are open orders that go out, and certainly that's part of it. But something bigger is at foot here. And that is, I think it's becoming harder to get product, at least from this level. Now, if you're talking the good delivery bars, if what Tyler is saying is true, well, when that comes up, then it's good night, Irene, because I don't know where you're going to get it. I have no idea. If all of a sudden you get to that point, the all-time low, I think, in registered was around 20 million ounces, I think. And if at the rate we're going, we're pretty close to that. At some point, they have to say you can't take delivery any longer, or the whole system blows up. So, Chris, I don't know. I just think, because I don't have any way of answering that definitively, simply to say it's a combination of way more demand than there is supply and capacity. So it's a little bit of both, I would say.
Yeah, and if we look at that Comex registered, again, under 35 million ounces, how would you compare this to 2016 and 2011, where we did see lower numbers? Metal came back into the exchange after both of those times, but how would you compare what we're seeing now to those previous periods?
Well, 2016, I think, is a little bit, none of this is like what we're seeing right now. I mean, in 2011, you could argue everyone was buying it because it was going to 50 and everyone thought it was going to go much higher. In 2016, everyone was selling it, and there wasn't really, no one was buying it. So I don't know that they had to have massive inventories on Comex. It had very little demand at all, at least from a retail perspective. And when you look at what's happening right now, to me, what is different than any time in my entire career is that my entire life, Chris, the United States was the place to be. Everyone wanted to invest in the US, and precious metals were an afterthought. That's not the case anymore. And I think the world is awoken. Look what happened in the UK. Look what's happening in Europe with riots everywhere. Look what's happening in Japan. Look what's happening everywhere. There is war, there's famine, there's energy problems, there's record high inflation all around the globe. There's people are concerned and waking up to this for the first time. So for the first time in my career, I think you have a global concern and a global awakening that fiat currencies are being destroyed and inflation is killing people. And after coming out of prolonged lockdowns and all of these things that have created anxiety and divisiveness and anger and stress, when you see record inflation on top of all of it and supply chain distortions, people are looking for the very first time, waking up. And it's still a very small amount. Like I say, the pimple on the elephant, but that alone has enough to wake people up. Now, I guess more than anything, what concerns me more than anything is this is a coordinated drawdown, not just on the Comex, it's the LME and it's the ETFs. And that happens as the prices collapse. So it shouldn't be that way. And what is happening is betraying the price. What is happening is what the biggest money in the world always does. They front run the problem and they're using the rhetoric and the price to reposition before everyone figures it out. That's what's different this time. Before it was hope springs eternal and green shoots forever in the US with the dollar. And I think we have dug ourselves a hole that we can't get out of, because as rates continue to rise, we're going to have the same problem that they did in the UK. At some point, the bond managers have to sell and the pension funds have to sell, or they're just going to get destroyed, eviscerated. That's why you got Janet Yellen coming in saying that she wants to issue short-term treasuries to provide liquidity to the back end of the market. And she'll buy the 10 and the 30 year, which are loaded into these pensions that nobody wants, which are inverted in the yield curve right now. Anyway, we are at that part of the game where things are spinning out of control all over the world, and it's coming here too. And maybe that's why you're seeing these drawdowns before it happens. I think it's different than before because the world is different than before, and the United States is different than before, and maybe even retaining its world reserve status has a possibility that is different than before. So this is unlike anything I've seen, where I'm concerned about getting product. I'm concerned about premiums not coming back down, and I really believe this is just the beginning, and I wish I didn't.
Yeah, and another question about the premiums. Obviously, the American Eagle's quite a pricey premium right now, close to 100%, depending on where you go. What do you say to people who call in and still want the Eagles in terms of the value there, and also with that premium risk? Is that something that as the 2023s come out, that the Mint could increase the production finally on the 2023s, and that could bring that premium back down? It seems like a delicate area to be in right now. And what do you tell people on those?
Yeah, well, it is. I mean, it's a very delicate area for a company like mine. We're paying. Let me look and see real quick what the current. This would be if someone were trading for something else, and I'm not going to make a penny, right? If you never bought from me, you're going to sell some Silver Eagles. I'll make something. But right now, my bid price is $12 over spot on Silver Eagles. So I'm going to buy 100,000 Silver Eagles at $12 premium and $1.2 million. I can't hedge. I can hedge the silver, can't hedge the premium. And if what you say happens, yeah, we didn't tell everyone. That's what we've been doing. We've been pumping out Silver Eagles. Here's 27 million of them for the start of 2023. And bang, the premiums collapse and I'm dead in the water with that premium and I'll never get it back. So that is one of the risks that dealers take when you have high premiums. There has to be a higher spread because the risk is unhedgeable. I don't think it will happen. I don't think you'll see them do this. There's something nefarious about it. Look, I'm a US Mint authorized reseller, and the Mint has defined my career in many ways, but something is going on when I figured that out more than ever is when they called me in July and said we're going to curtail production of gold by 50%. Chris, my cost on gold eagles is north of 10% before I make a penny. I never sold them that high ever to the public. I never sold them above 6% to the public. My cost is north of 10 on gold. And what's crazy about that is that since 2020, for all of us, for me, for SD, for JM, for Atmex, silver represents 95% of what everyone's selling, not gold. And no one's been buying gold the way they have silver. Sure, we all sell gold, but not like silver, and not even close. And yet they're making it impossible to get gold too. And the premiums on those are out of control. Look at the fractional gold eagles. They're 30%, 25%. They're off the charts. They're numismatic. And so something's going on with the US Mint, and I don't know what it is. And there's this line between conspiracy and reality, and you don't know which side to go to. Is it conspiracy? Are they trying to forestall a run out of the dollar by making it hard for people to get gold and silver? Is that why they're suppressing it? Are they trying to keep the calm before it all blows apart? And the unintended consequences of that will be that when it does blow apart, people in this country won't find anything, and they haven't been made aware of what is really happening. But that to me is one of the troubling things. Why is it so hard to get product? I have been saying that we'll get a good indication here real soon when the 2023 pre-orders come out. When the 2023 pre-orders come out, we will have already known what the allocations are going to be, and we'll find out. And my guess is premiums don't come down one iota. Why wouldn't they have increased them now? Janet Yellen got on if you go on the Mint, there's a video, and she talks about they've greatly increased production of silver eagles to meet demand. My ass, they have. I mean, not even close. So my whole career prior to 2020, premiums on silver eagles at most were $3.39-49 an ounce at most. And I would have paid $265 over spot to buy them back. Now I'm paying 12 and they're, I don't know, 16, 17, 18 bucks over. It's insane. And I don't think they're going to come back down in 2023. I guess we'll see in the next few weeks.
And why do you think it is that so many people are going silver over gold? Is it just because the gold price still off the highs, but still on the higher end compared to historical ranges, especially over the past decade, versus silver really on the low end? Is that the main reason, or what is it that has the customers choosing silver over gold when they call in?
The story is ridiculously compelling. You have an asset that is massively depleting in nature. For 5,000 years, came out of the ground at 16 to 1 to gold. Now it's 7 to 1. Only 35% of the silver that comes to industry, to the market, is from companies that are mining silver. Well, people say, well, what if there's a big recession and they don't? Well, they will use as much in it, and because it's a byproduct, if there's a recession, 65% of the metal comes from byproduct mining. Those companies that are mining other metals, they slow down too. The supply is dwindling in nature. It's becoming harder to find, and it's harder to mine. You have to dig deeper. The low-lying fruit was picked a long time ago. So it's depleting in nature, and it has a massive expansion in use cases in green and digital applications. You try to build all these electric cars and solar panels, you need silver. And at the same time, the duality of the demand is in monetary demand is off the charts. So you have duality in demand, an asset that is over half of its historical geologic footprint in relation to gold, 16 to 1 for 5,000 years, now 7 to 1, yet priced at 90 to 1. I mean, everything about it, price performance, price history, geologic ratio, price ratio to gold, the whole 9 yards scream it's the value of a generation. And they've done a hell of a job at suppressing the price. And if I didn't see the amount of drawdown and accumulation when a country like India is massively importing it, and huge drawdowns, and JP Morgan, according to Ted Butler, amassing over 1.1 billion ounces. I mean, you can just see the repositioning. The chess pieces are being slowly and methodically moved into place as it pertains to the drawdown of supply using the price to misdirect. And, you know, I don't know. I can't see a more compelling place to put your money. And I'm a gold bug, but silver to me is a once in a generation opportunity. And it's been frustrating. It has. But just think about this for a moment, everybody. As the prices come down since March, you've seen with it the most sophisticated investors in the world, because Chris and I know firsthand how hard it is to pull a bar off of Comex. The most sophisticated investors in the world are bleeding Comex, LME, and the ETFs dry. And at the same time, every refiner across the globe is either not taking new clients or can't produce product for whatever reason. And the mints around the world are doing the same thing. That is not a market where price is determined into value or demand. That is a market where price is being used to manipulate perception. And I think that's the key here. So their actions are betraying the price. And that's what gives me confidence that we're on the right path.
Well, it's certainly going to be interesting to see how it all shakes out. Again, like you said, that was one of the things that drew me into silver, where so much of it consumed in industry. And if you have increased demand going into these metals, that leaving a lot less silver out there than gold, certainly by dollar volume. So interesting conditions out there. Appreciate everything you shared. And before we wrap up, if people have questions, what is a good way to reach you to get information or pricing?
So if they have questions, they can always send me an email at info@Miles Franklin. If they're looking to purchase, send it to Arcadia@milesfranklin.com. And we'll make sure that your listeners are getting as good or better of a price than anywhere in the country, personalized service. And I don't know, Chris, it's just great to be back here. I appreciate it. It's good to see you. And I hope to see you back here stateside, hanging out with me here, hopefully real soon.
Well, I'll look forward to that too, and appreciate everything you shared. I think people are confused by what they're seeing out there with the price on the lower side, yet they're seeing the premiums higher. So hopefully this will be helpful for everyone listening at home, at least get a better understanding of what's going on out there. And I think this has been reported throughout the industry, seeing these conditions, delays and rising premiums. So hopefully that helps, and appreciate you making some time to join me as always. And thanks for being a part of it today.
You stay well, buddy. Hope to talk to you soon. Thanks again.
Well, thank you, Andy. I sure appreciate the update. I know it's always helpful for people to hear what's actually happening on the physical level of the market, which is often quite divergent from what we see in the Comex spot price, and certainly challenging times when you see that divergence and making decisions and understanding what to do. But hopefully that shed a little light on things and gave you some insight and allow you to make your decisions best going forward. Before we wrap up, I would like to thank Silver Viper, who brought us today's video. Silver Viper is exploring its La Virginia gold and silver project with its El Ruby discovery that they took over from Pan American Silver Corps. They currently have 49 million silver equivalent ounces there, continuing exploration and planning to expand that resource area. Fortunately, they'll be joining us at Silverfest on Saturday, November 12th. And in addition to giving a presentation, they will also have a booth there. So you'll be able to interact directly with management from Silver Viper, get any of your questions answered. You know, we have a lot of silver mining stock investors in our audience. Excited to have them on board at Silverfest. So again, thank you, Silver Viper, for bringing us today's video. That said, going to wrap up for today, but I will see you again tomorrow.